going to sit here and go, and the sneak peek isn't just going to be an overview of the 6 modules. I'm going to show you a pattern that we're going to teach you in one of the modules, and that's called a flag. You can take a look at these setups at the end of the day. What you need to do, though, is you need to be available to watch the market at the open, because a few of these patterns are breakout patterns. But I'm going to show you an alternative. Okay, so let me kind of go through. I'm going to go into the VectorVest program, and I am going to. Oops, nope, wrong one. Oops. Okay. So here, let me show you a flag pattern and kind of explain what a flag pattern looks like and what it really means. Mary is asking, can I use this also for the SPX to decide what type of market it is and then pick a stock? Mary, we're going to use the VectorVest composite. That is our broad market indicator. So what we're going to do, in terms of what is the market doing, we use the VVC. So that's what we're going to be doing. You can take the same principles and apply it to the S&P if you wanted to, but we're going to use the VectorVest composite because it's our broad market index, similar to the S&P. If you like using the S&P, go right ahead, but we're going to use the VectorVest composite. So here's what a bullish flag looks like. Okay, a bullish flag formation or formations are found in stocks in strong uptrends. They're called bull flags because the pattern resembles a flag on a pole. And the pole is the result of a nice vertical rise in the stock's price. And the flag results from a period of consolidation after the rise is over. Okay, after the uptrend is over, and you can see a nice strong uptrend, pretty good volume. Actually, let me zoom in here because you can see the volume a little bit better during that uptrend. Reason why I did that, by the way, is because this big that big volume day there distorts the volume chart at the bottom, right? You don't think that that's high volume because of this one big day where the stock traded at 185 million shares? Yeah, 185 million shares. I don't know what that day was, but it distorts the volume. So I'm going to eliminate that from our perspective, and you could see a good amount of volume here during that uptrend, and that's important. You want a strong vertical rise in the stock's price on really good volume. Then what happens is you get some profit taking. Okay, you get a consolidation period. Now the flag, which is the result or the formation of the consolidation period, it can be a horizontal rectangle as you see here. It also, and I'm going to show you another example here, it also could angle down away from the prevailing trend. So it might look like something like this. Consolidation but angling down. That's also known as a bull flag as well. Okay. Jerome is asking a good question. I might as well get it out of the way now. Jerome is asking, is there a unisearch to find flags or the consolidation? Not that I have come up with yet, Jerome. I mentioned earlier that a lot of these techniques are cherry picking techniques. I haven't figured out a way to find or to search for a flag pattern or a pennant or a triangle yet. I'm not saying I'm giving up on it, but there is no search in the VectorVest program right now that can find these patterns. I might be able to get us close. I can't promise anything, but we still have about 3 weeks left till we launch this course. I'll talk about that in a little bit. So I might have some time to come up with a search that may get us close to what we're looking at here. You're welcome, Jerome. Dave says, does the downward flag have to obey any rules? The rules really are, and let me wait to answer that when I get to the downward flag, because here we're just looking at a horizontal triangle, right? Oh, I'm sorry, a horizontal rectangle where you have a very defined floor, very defined ceiling. You got these peaks and troughs that fall right in between the upper and lower rectangle lines, right? And what I'm seeing here too is diminishing volume, right? Volume is drying up a little bit. Sure, you'll have some big days, but for the most part, after the uptrend, after the strong vertical rise, you get this consolidation period while volume is beginning to dry up. Okay? So what we're looking for, and again, the shape of the flag is not as important. Okay? Somebody's asking, why doesn't VectorVest develop searches for flags, rectangles, and pennants? It's not that easy. It's not that easy, honestly. It's not that easy. But again, I'm not giving up on it. I'm still going to continue to work at it. But we will see. We will see if I'll be able to come up with anything. Okay. Again, the shape of the flag is not important. What's important is the underlying psychology behind the pattern. Okay. Mary's asking, how did you find them? By cherry picking, by looking at the chart. That's how I found this one in particular. And it didn't take me that long. I looked at the top S&P 500 stocks, and I just went through chart after chart, and they just pop out at you. If you're able to understand the pattern, recognize the pattern, doesn't take very long to pick them out. Okay. Basically, despite the strong vertical rally, the stock refuses to drop appreciably. Bulls snap up shares at any chance they get. They're not waiting for lower prices. Okay, they're trying to pick up shares at any chance that they get to take advantage of the continuation that they feel will occur after the consolidation period. Okay, then you get your breakout. Get your breakout on nice volume. We're looking at 15 million shares, a little bit more on that day. Okay, so there's your trigger. Strong vertical rise followed by consolidation. You wait for the breakout. That's when you take the trade. So here's what happened on that day. The stock price opened below the upper line, didn't it? But during the day, it crossed above it. So there's two ways to trade this. And somebody was asking earlier about, do I need to watch the market throughout the day to trade the breakout? And the answer is no. If you were able to watch the market during the day, you were able to trade the breakout intraday as it broke out of the flag pattern, right? As it broke out of the horizontal rectangle. If you're not able to, you saw the breakout at the end of the day. So on this day, what is it, January 9th, 2020, at the end of the day, you said, wow, look at this. Bristol Myers broke out, and it closed above the horizontal rectangle line. I'm going to take this. I'm going to put my order in tonight for tomorrow if the stock continues to move higher. Hit a high of 65.77 that day. You put your order in a little bit above 65.77, which means that if the stock continues its breakout the next day, you are in. That's for you midnight cowboys, for those of you that can't watch the market during the day. Okay, you saw it at the end of the day. You put your order in that night. You put your order in the morning of, early before you went to work. And if the stock continued, you got filled. If it didn't continue the breakout, you didn't get filled, which is good because what does that mean? It means it didn't reach your buy price and continued to move lower. Okay. So what I'm going to do for the purposes of this presentation, I'm going to use about $65 as our entry price. It opened at 64.14, which was down at the bottom of the body. It closed at 65.45. I'm going to use somewhere in the middle, a little bit closer to the close as my entry price. 65 bucks. Okay? Where is our initial risk? Very important. You enter the trade, you trade the breakout. Where is your initial risk? Your initial risk is the bottom of the consolidation period. Essentially, in this case, it's at support, right? You got a significant level of support here at about $62 and about 50 cents. If we enter at 65 and our initial risk is 62.50, that's $2.50. That's where our initial risk is. Everybody with me so far? We enter on the breakout. Let's say we got in again at 65 bucks. Whoops. Oh my goodness. Dateline. $65. We enter. Our initial risk is the bottom of the consolidation period. Essentially, it's at support. That level is 62.50. We enter at 65. 62.50 is our initial risk. That's a $2.50 initial risk. Okay? On a $65 stock, that is $6.50 is 10%. $2.50 is a little less than 5%. So we're not taking on all that much risk here. Okay? Not taking on all that much risk. Maybe a little bit less than, thank you, Jesse, 3%. About a 3% risk, thank you. Which is a little less than 5, right? But, all right, so we take on about a 3% risk. $2.50 is your initial risk. Ideally, what you want to do is make more, potentially, than you can lose. And with this pattern, you're looking at a 2-to-1 ratio, okay? 2-to-1 ratio of reward to risk. If I'm going to risk $2.50, I want to make at least $5 on the trade, okay? So let's fast forward. Did we get there? Yeah, we got there, right? So $2.50 from 65 is $67.50. We got close. We got to $67.10. Okay, so we didn't quite get there, but we're really close to 2-to-1. So how are we going to start to manage this trade? Well, how important is volume? Well, what we saw on the breakout, and a few of the days later, we saw increasing volume, didn't we? But over these last couple of days here, when we're getting really close to our profit objective. Yes, you're right, Mark. You needed to hit 70. You're right. Not 67.50. That would be 1-to-1. 70 would be 2-to-1. Okay, but we didn't get there. We didn't get there, right? We got to $67. We got to about $67 over these next couple of days, and the first presentation, guys, the anatomy of a swing trade, is so important because David is going to talk about price and volume and how important volume is. What are we starting to see here with volume? We're starting to see volume dry up a little bit, aren't we? We're starting to see, this is a doji. This is called a shooting star. It's a bearish candlestick formation. I'm going to put stochastics on. That's another indicator that we're going to teach you. A bearish candlestick formation with drying up volume with stochastics above 80 is a warning sign. I'm going to exit the trade at any sign of weakness, meaning if the stock price moves lower than the low of that day, of January 15th, if it moves lower than 66.43 the following day, I'm going to exit. Well, it doesn't actually. It continues to move higher. I'm going to raise my stop. I'm getting concerned that volume is drying up even more, but I'm raising my stop. If the following day the stock price goes lower than 66.51, I'm out of the trade. It doesn't. You know what? It continues to go up. 66.70 now is the new low. That's called a gravestone doji. Okay, that's another bearish candlestick pattern, especially when stochastics above 80. And I don't like the fact that volume really started to pick up on that down day. All right, so I'm raising my stop. I'm trailing my stop higher, and I'm using the lows of each day as my exit criteria. I'm profitable on the trade, right? I got in at $65. The stock's at 67, 66 and change. I'm profitable on the trade. So if the stock goes lower than 66.70, which is the low of the gravestone doji, I'm out. Whoops. What the heck? Whoops. Wrong one. But it doesn't. Continues to move higher. Continues to move higher. It closes higher. It continues to move higher. Okay? Jata says, can you estimate how much the stock will go up after it breaks out based on the pole and the flag length? Yes. Great question. The estimate of how to measure the breakout or how far price will rise after the breakout is generally the length of the flagpole itself. Okay? So if you draw the line here, and create the flagpole, you can just drag it and say, after the breakout, that's how far I should expect the price of the stock to move after the breakout. It's not always 100%, but that's how much you should expect the stock's price to move on the next leg after the breakout. Great question there, Jatar. Okay, so now what's starting to concern me, guys, is this candle right here. So I kept on raising my stop. I kept on raising my stop. I kept on raising my stop, right? But what I'm looking at here is a green candle that's filled. Stochastics is still really high. So price of the stock closed below the low of the session, well off of the high, in an oversold situation on pretty high volume. The next day, I get weakness, I'm out of the trade. And again, it's a profitable trade. Okay? Let's look at another one here. Okay, so here's ODFL. Let me zoom in here. Okay, so here's your vertical rise. Here's your flagpole. Let me back it up because you're in an uptrend, right? You're in an uptrend. You got a strong vertical rise on pretty high volume. And then you get this period of consolidation. And here's where the flagpole, or the flag, excuse me, slopes lower, angles down away from the uptrend or the pole itself. Okay? Then you get your breakout. There's your breakout. Volume pretty decent on that day. Stochastics was pretty low, not quite below 20, but pretty low. But you get that consolidation period. The flag itself creates a rectangle, an angling down rectangle, where you get this period of consolidation. Buyers are trying to push the price higher at the lower trend line. Sellers are trying to push the price lower at the upper trend line. How do I know that? Look at the wicks, guys. Look at the lows and the highs at each trend line, right? You get these long lower wicks at the bottom trend line. You get these long upper wicks at the upper trend line. So there's this battle between the buyers and sellers, and then you get the breakout. You get that nice breakout, okay? So with a bull flag that angles lower, where's your initial risk? Your initial risk is the low of the consolidation pattern. So right in this area here, about $130.70. May says, would you put in a buy stop to buy over the resistance line? Yeah, absolutely. But where is that? So let's just say here, all right, so let's just say you're right here. All right, so where is that? So this resistance line here. So what you'd have to do is calculate where that resistance line, that top of that line is. 136.70. All right, well, the stock closed on this day at 135.28. Okay, if it breaks above that resistance line, you put your buy stop order in the night before. Good for the day. If it doesn't fill, which it didn't fill the next day, you continue to lower it, right? You have to lower it because your line is lowered, right? Your downtrend line is lowered. Mike May says exactly, right. So you continue to lower it. Okay, you put it there. You're looking at 135.96. Stock closed close to it, 135.74. All right, didn't get filled the next day. Well, your trend line now, your downtrend line continues to slope lower, and you continue to lower it. Where are you at now? You're at 135.12. Still not there, right? Continue to lower it. You're at your downtrend line. You kind of extend that line out. 134.45. There you go. So your buy stop order that you put in, by doing what Mace is suggesting, is to put your order in the night before based on the hard right edge upper trend line, is a good approach. Okay. Abdullah says, how do you calculate the resistance line. You're drawing the line and you're connecting the relative highs as the stock angles lower. Does that make sense? So you're just connecting the relative highs. Okay? All right, let me continue, guys. I know there's some questions here, but let me continue. Louis says, do you consider the breakout to be above the high of the previous day or just above the body of the previous day's candle? That's okay, Mace, no problem at all. It's above the line itself. It's above your upper downtrend line. So you're drawing these lines, connecting the highs. The breakout occurs when stock price goes above that line, not above any high because, in this case, it's going to go above the previous two highs, but it's above the trend line. Just like when you trade support and resistance, right? If you're trading a resistance breakout, you're taking the trade above the resistance level, right? Not necessarily above any price or any candle level, but it's above the level. So here you're trading it above the upper line there. Okay, so good volume came in on that day. There's your breakout. It's clear. You got a clear breakout. You got a clear breakout on good volume. Stock opened above at 134.40. It closed at 136.22. Let's split the difference. Let's say we get in at 135. You didn't get in right at the open. You didn't get in at the close. You got in somewhere in between. Okay? Where's your initial risk? Your initial risk is the low of the consolidation pattern. So let me just take off this line so we can see it better. Where is the low of the consolidation pattern? Right in this area here. Just draw it, right in there. So it's 130.61. We get in at 135. Our initial risk is 130.61. That's a $4.40 initial risk on a $136 stock. Who was it? Jesse, what's that? What percentage is that? $135 stock, $130.61 risk. That's $4.40 on a $136 stock. What is that? $13 is 10%. $6.50 is 5%. So we're looking at about a 3.5 to 4% initial risk. There we go, Jesse. Thank you. 4%. 4% initial risk. All right. So we want to make 8%. We want to make 8%. We want to make, if it's $4.50, we want to make about a $9 profit. Do we get there? We sure do. We sure do. $9 profit. $135 entry, so we're looking at $144. Yeah, we get there. We get there a couple of days later. Nice breakout, right? Really nice breakout. Nice strong up move initially, consolidation. We wait for the breakout. We get it. Nice strong volume coming in. So let's manage the trade. Do we take the trade off as soon as our initial profit target is met? Maybe we take half off. Just a quick personal story here. I made a good bit of money on a stock called TRTX today. And I bought it on Monday. Bought it at $1.70 something and went all the way up to about $3 or $4 over the next couple of days. And at near the close of yesterday, I took half off the table. Okay, I didn't take the whole trade off, and I'm glad I didn't take the whole trade off because the stock went up another 25% today. Now, was I kicking myself at the open today when I saw it up 30% or 25%? No. I would have been kicking myself if I would have took the whole thing off and not at least let the rest run. So when your initial profit target is reached, take half off the table, let the other rest run. Okay? Again, that's kind of trading 101 as well. You don't have to take all of it off. So we reached our profit target. Stock went up the next day. Maybe we took half off on that day, on February 6th. Stock continued to run. Now what are we seeing? Drying up volume again, guys, right? We're seeing drying up volume. Stochastics is overbought. That's called a hanging man, followed by a doji, followed by weakness. Let's just take the rest of the trade off and move on. Mary is asking, do you pick a stock after you see the total flag, not just when you see a formed pole? You need also the flag to have been formed, right? So yeah, so what you're looking for is the strong up move, followed by consolidation. So if you happen to see the stock after a strong up move and you're following it and the stock starts to pull back a little bit or move sideways, it's forming a flag. You got to keep watching it. Put it in a watch list. Name the watch list, bull flags. Continue to watch it every day, okay? And so here, let me kind of take you on a real life situation. Let's just say this is the hard right edge. Hard right edge. Okay, you see, my goodness, look at that. Big, strong vertical rise. I missed it. Oh well. Let's keep track of the stock though. Okay? Good volume. Let's keep track of it. All right, I'm seeing consolidation. I'm not seeing any kind of breakout. Right? So you begin to draw your lines, connecting the lows and connecting the highs. There you go. Now you're watching it in real time, moving forward. All right, you're waiting for that breakout. You got the breakout there, okay? You didn't really get it on an end of day basis. You got it on an intraday basis. So if, let me pull that over. If you weren't waiting to the close of the session, if you were kind of an intraday trader, you could have traded that breakout. Okay, so you're watching things in real time. David says, what happened on the chart prior to the previous consolidation phase? Let's go back. What happened to the chart previous to the consolidation phase? Point out where, Dave, you're talking about. Previous to the consolidation. Here's the consolidation. What happened on the chart previous to the consolidation? Well, you were in an uptrend, right? You're looking at higher highs, higher lows. Mace is asking, how many days of consolidation would you suggest is a good consolidation? No rule of thumb there. It's kind of you're just eyeing it. So again, if you're, oh my gosh. So if you're just looking at it like right here, there you go. There's your period of consolidation. So, and by the way, if you get the consolidation, but you don't get a breakout above the flag pole high, you're still in a period of consolidation. And you can then adjust your trend lines accordingly. And we'll teach you all about that, guys. We'll teach you all about how to do that. Okay? All right. Let's now talk about some bonuses. Some of the special bonuses that you're going to get. I'm going to talk about the dates, when the course is going to be released, more importantly, how much it costs, right? All that stuff. But here are some bonuses. If you don't already have VectorVest Real-Time, we're going to give you 60 days access to the VectorVest Real-Time program. It's going to be included in the course. And this is, look, you don't need real-time. You don't need VectorVest Real-Time. Everything that we teach you in this course can be implemented without real-time data, pro trader scans. There are some cherry picking systems that we're going to talk a lot about, but real-time is nice to have, and we're going to make sure everybody's on the same playing field throughout the duration of the course. Everybody's going to get real-time if you don't already have it. Okay? Normally, this course is $995, okay? But if you order before the end of today's webinar, we're going to knock $500 off. $495 for 6 live modules, 6 live mastery support sessions as well, okay? Now, this is just for you folks, by the way. I want to thank you guys for joining me here today. It's 4:30 on a Thursday, day before a holiday. I'm sure you got a lot of other things to do. But we wanted to give you guys a special rate, knock off $500 off. It's about 50%. So if you order before the end of today's webinar, and I'm going to stick around for a few more minutes to answer some questions, and I think Ray put that in the chat box, by the way, www.vectorvest.com/PST. Lou is asking, is elite pricing lower than that? No, and this is what we did. If you go to vectorvest.com/PST, you click on the register button. Everybody will see the special $495 rate. The elite rate, Lou, is half off the regular price, which is $497.50. We wanted to make your lives a little easier at this time. All right, we know things are crazy right now. We didn't want to make elite subscribers have to give us a call, so we just structured this special webcast rate of $4.95 to match what the elite rate is. So Lou, if you are an elite subscriber, I'm guessing you are because you asked that question, you don't have to give us a call this time. Normally you would, right? You have to give us a call for the special rate. We structured it around the elite rate so that everybody gets the $4.95 rate, whether you're elite or not. And again, it's a limited time offer, so you have to register within the next few minutes here before we're done on this webcast. Fill out the registration information and you will get that $4.95 rate. Jesse says, is this already part of the ultimate solution? No, Jesse, this is not. This is a trader's course. This is for traders, so it is a little different than the ultimate retirement solution, which deals more with retirement-minded techniques. This is for the money that you have set aside to just trade a little bit more actively, right, for your swing trading portfolio. So it's not a part of the ultimate retirement solution. So yeah, a few guys have asking about the elite rate. No, the elite rate is actually $2.50 higher than this. So for those of you that are elite subscribers, you don't have to give us a call. You could just fill out the registration information and get that special $4.95 rate. Mary is asking, what are the dates? Oh, perfect segue, Mary. Thank you very much. The dates are as follows. The first module will be delivered again live on the 29th of April. Oops, about 3 weeks from today. Okay, so we have some time here. Each live session will begin at 2 p.m. Eastern Time. So the 29th is the first session of April, the 6th of May, the 13th, the 20th, the 27th, and the 3rd of June. By the way, you don't have to remember all these dates. Once you register, you will receive plenty of emails from us letting you know all the dates and times of the live modules and of the live mastery support sessions as well. Okay, Douglas, don't worry about that discount code. Douglas saying it asks for a discount code. Don't even worry about that. Douglas, from what it appears, is registering right now. Awesome, Douglas. If you're someone that's registering right now or saying, you know what, this is the course that I've been looking for, just type in I'm in. Type in I'm in, I'm registering, looking forward to it in the chat box so I can kind of put a name to a student so that when the time comes, you know, we'll all be familiar with each other. Douglas says, I'm in. Douglas is registering as we speak. Again, guys, don't worry about the discount code, okay? But here are the dates for the live mastery sessions. They will be conducted on the Tuesdays following each module. So, May 5th, May 12th, May 19th, May 26th, June 2nd, and June 9th. Robert is asking, when will the recordings be available? I can't attend live. They will be available within 24 hours of the live session, Robert. And remember, you get access to each of these recordings, each of these sessions, the entire course for a year. If you can't attend live, we will upload them within 24 hours of when the session is delivered. Okay. All right, guys. Any other questions here before I kind of close things down? Philip says I'm in. Welcome aboard, Philip. Warren says, how many times a year will this be offered? Not able to dedicate the time right now. Hard to tell, Warren. Possibly next quarter, most likely before the end of this year. So can't really tell. We haven't put anything on the schedule yet, but most likely it will be available sometime in 2020 once again. All right, let's see. Question is, Dr. Paul, though during the international webinar, all right, let's see. Greg says I'm in. You're welcome, Warren. That actually is of what I showed you. Question is, Dr. David Paul during the international webinar that in a bull market, volume rises upon a price rise trend and volume falls when price trend falls. Why is this not the case in the examples you showed us? It is. Not sure if you were paying attention, but it is. I showed you that when price initially rose and formed the flagpole, it rose on higher volume. And when price consolidated or angled lower during and formed the flag, volume dried up. I showed you that and I explained that a couple of times there. So that is the case, and that is something as well that David will talk about in that first module. Okay. Mary's asking, if I register, can I get a refund if my yeah, okay. So if you change your mind before April 29th, and will you apply these principles to the VVC? Yes. By the way, this is money back, 100% money back guaranteed. If you decide before April 29th to, for some reason, cancel, we'll give you your money back. And if you take the course and after the course is over, you say, you know what, I didn't learn anything, I can't use any of these principles, it's 100% money back guaranteed. We take the course away from you, out of digital chalk, but we'll give you your money back, no questions asked. Okay. Yeah, Lou is asking, are both you and Dr. David Paul teaching all sessions? Both David and I and Steve Chappell. Steve is the Director of Trading Systems Development. He runs the Jockey Club in the morning, and he does a ton of other webinars. He's one of our best. So the three of us will be your three instructors for this 6 weeks. Philip is asking, quoted as $5.95. Why? It's not $5.95, Philip. Let me go back here and I'll show you. What you have to do, let me actually go VectorVest.com/PST. That'll take you to this page right here. I know it says $5.95 here, but when you click on register, you'll see this buy now bonus limited time offer of $4.95. So again, if you're in the summary section, it might say $5.95 there, but when you click on register, you'll see the $4.95 price there. And I'm on our website here live. This is not a slide or an image or anything like that. So I'm on our website live. All right, guys. You're welcome, Philip. Any other questions, guys, before I wrap things up today? All right. Well, folks, you're welcome, Mace, and I appreciate your time as well. Have a great day, everybody. Have a great weekend. Stay safe, stay positive, stay healthy, and we will see everybody very, very soon. So take care, everybody. Have a great weekend. Bye-bye.